Welcome back to the channel. This is an urgent emergency update because something unusual is happening right now across the entire financial world. It's not just Bitcoin, it's not just crypto, it's not just tech stocks. The entire market, AI stocks, crypto assets, large cap tech, even some indexes, is starting to roll over. And while this kind of pullback happens from time to time, this one has a very different tone, a very different rhythm, a very different signal behind it, because the asset that often leads major market corrections has already flashed a warning: Bitcoin. You don't have to be a Bitcoin fan. You don't have to believe in crypto. You don't have to own even a single Satoshi. But you do need to pay attention because Bitcoin, whether people like it or not, has become one of the best early indicators for financial stress, liquidity tightening, or incoming corrections. Whenever Bitcoin starts to bleed silently while the stock market is still partying, historically, the rest of the market ends up following. And right now, Bitcoin didn't just dip, it reversed direction in a way that has traders, analysts, and algorithms all over the world sounding alarms. The fall didn't come out of nowhere, the signs were there. The momentum weakened, the liquidity dried up. But the real shockwave came from one specific signal. Bitcoin broke below its 50-week moving average, and that single event triggered something almost psychological in the minds of many technical investors. For them, the 50-week moving average is not just a line, it's not just a chart, it's not just a trend indicator. It's a prophecy, a trigger, a threshold that separates the euphoric part of the cycle, the good days from the deep correction phase that usually follows. In this cycle, that crucial 50-week moving average was sitting at around $13,000. And the moment Bitcoin fell below that level, everything changed. It was like a switch flipped, a floodgate opened. Investors who rely on long-term technical signals started selling. Some of them sold aggressively, others sold slowly. But collectively, that selling pressure created the cascade we're seeing today. It's easy to underestimate how powerful technical triggers can be. People sometimes think charts are nothing but lines. But those lines represent mass psychology. They represent the points where thousands of traders, hedge funds, bots, quantitative algorithms, and even retail investors make decisions. The 50-week moving average has been one of the most reliable long-term indicators of Bitcoin's cycles. Every time Bitcoin stayed above it, the bull run continued. Every time it fell below it, the correction accelerated. And this time was no different. The moment the price dropped under that line, the prophecy was activated in the minds of those who believe in it. To them, the cycle's top has already been made, the easy days are over, the trend has shifted, and once belief changes, behavior changes. And once behavior changes, the market changes, but this isn't just about technicals. There's a deeper story playing out beneath the charts. The market today is very different from the market 3 or even 5 years ago. The rise of AI stocks created one of the biggest sources of optimism the world has seen since the internet boom. Money flowed into AI, money flowed into tech, money flowed into crypto. It created an illusion that everything could go up forever. But now, AI stocks are selling off. And that's critical because AI became the poster child of this bull cycle. When the poster child cracks, the narrative cracks with it. Investors who were leveraged on AI growth are now reducing risk. Funds that bet big on future earnings are now rebalancing. The optimism that pushed valuations into the sky is giving way to cautious realism. And whenever that shift happens, Bitcoin being a high beta asset feels the shock first. There's also a liquidity story happening simultaneously. Liquidity is the lifeblood of financial markets. When liquidity is strong, risky assets thrive. When liquidity tightens, risky assets suffocate. And right now, liquidity is tightening across multiple fronts. rising bond yields, uncertainty in global markets, changes in central bank expectations, and geopolitical pressures. All of these reduce the amount of free money that can flow into speculative assets, and the moment liquidity shrinks, Bitcoin responds like a tuning fork. It vibrates first, it screams first, it sends the earliest warning signals, and this time the warning is loud. But the most fascinating part of this entire situation is how perfectly synchronized the technical breakdown is with the macro environment and investor psychology. The break below the 50-week moving average wasn't just a technical event. It was a psychological confirmation of a bigger macro shift. To some people, this move is simply a correction, to others it's a reset, and to long-term technical followers, it's the symbolic end of the bull phase. And that's exactly why the selling accelerated so quickly. Investors who were already nervous took the breakdown as the final signal to act. Imagine being an investor sitting on significant profits from the past year. You watch inflation spike. You watch central banks shift their tone. You watch AI stocks, which were previously unstoppable, suddenly start losing momentum. And then you see Bitcoin, your most sensitive indicator, break below a level that historically means trouble. At that moment, even if you were still optimistic, the safest move becomes obvious. Take profits, reduce exposure, protect your capital. This is why the selling has started to intensify across multiple markets at the same time. This is why AI stocks and Bitcoin are falling together. This is why uncertainty is rising, and the truth is, markets don't crash because of one event. They crash because multiple signals line up at the same time. One signal alone can be ignored. Two signals can be debated. But when 3 or 4 major signals align, investors act. And right now we are seeing Bitcoin falling below a major long-term trend line, AI stocks reversing sharply, liquidity tightening globally, technical breakdowns across multiple risk assets, profit taking from funds that were heavily overbought. This alignment is rare, and it matters. But here's something even more interesting. Bitcoin falling first might actually be a blessing for the rest of the market, because it gives everyone a warning before the worst part of the correction arrives. It's like a storm siren that goes off before the clouds get dark. Bitcoin breaking down early means investors now have time to prepare. They have time to rebalance. They have time to lower risk. They have time to protect themselves before the storm hits equities with full force. People love to say Bitcoin is unpredictable, chaotic, irrational. And sometimes it is. But when you zoom out, Bitcoin has an extraordinary ability to signal shifts in global liquidity conditions earlier than almost any other asset. In 2017, it signaled the top before tech crashed. In 2020, it signaled recovery before stocks bottomed. In 2021, it signaled weakness before the broader market collapsed. And now, once again, Bitcoin is signaling early. And yes, there are other theories too. Some analysts say whales are distributing. Some say ETF are seeing outflows. Some say leverage is unwinding. Some say macro concerns are growing. All of these could be true simultaneously. But regardless of the reason, the message is the same. The easy part of the cycle is over. The question now is what happens next. Does Bitcoin stabilize above the next major support? Does it continue falling toward historical retracement levels? Does the rest of the market follow with a deeper correction? Or does liquidity return sooner than expected? Those are questions still unfolding. But one thing is clear. Ignoring Bitcoin during these moments is a mistake. Because Bitcoin doesn't just react to the market, it often predicts it. So if you're watching this right now, pay attention. Not just to the price, but to what the price represents. A shift in belief, a shift in liquidity, a shift in macro conditions, a shift in risk appetite. The cycle isn't over, but this phase of the cycle definitely is. Thanks for watching. Stay informed, stay cautious, and stay ahead.